Good day and welcome to this Lifestyle Trader educational video. Before I get started, I just want to say that this video is for entry-level traders and definitely not for the medium to advanced traders that are out there. Okay, so let's get started. Today we're going to be looking at dollar cost averaging. And the reason why I'm making this video is because a lot of people on our group has asked me to, do a little video explaining what dollar cost averaging is actually all about. So, first of all, we're going to take a look at the definition of dollar cost averaging. What is dollar cost averaging? DCA. Dollar cost averaging, DCA, is an investment strategy in which an investor divides up the total amount to be invested across periodic purchases of a target asset in an effort to reduce the impact of volatility on the overall purchase. The purchases occur regardless of the asset's price and at regular intervals. In effect, this strategy removes much of the detailed work of attempting to time the market in order to make purchases of equities at the best prices. Dollar cost averaging is also known as the constant dollar plan. And folks, I've got a short little clip that I want to play you, and we'll just stop for a second and then I'll come back to you and show you folks what I do when I enter with new money into the market.
Dollar cost averaging is a more conservative approach to investing than simply spending all your money on securities at once. This technique allows investors to commit to a fixed dollar amount of a particular investment on a regular schedule, regardless of the share price. More shares will be bought when prices are lower, and fewer shares will be bought when prices are higher, resulting in a lower average cost per share. Dollar cost averaging reduces risks by allowing investors to ease into the market over time. For example, Chris buys $200 worth of stock in Billy Bob's restaurants each month for 4 months. In January, the value of the shares drops to $50 each, so he buys 4. In February, the stock is worth $40, so Chris buys 5. In March and April, he buys 8 shares of Billy Bob's, which dropped in price to $25. Overall, Chris purchased 25 shares at an average price of $32. If he had invested all of his money at the same time, then he would have only bought 16 for an average price of $50 per share.
Okay, so that's a quick little explanation of how it basically works. And what I want to show you folks now is what I do when I enter the market with new money. Now we're looking at a Bitcoin chart here. Okay, and what I want to just point out to you guys is if you take a look at this chart, right, this is the daily. And if we go back on this daily chart, you can see this red candle with this very long wick that's on here. And if we go back, we can see this happens. This is obviously the daily, this is the daily chart, and you can see going back in this year, there have been many times when the price has dropped, and you see these long wicks on the price. Now, folks, the reason why I'm showing you this is because you've got to understand, if you want a dollar cost average into a market, into any asset, whether it be Pirate Chain, Bitcoin, Ethereum, it doesn't matter. Whatever asset that you are wanting to trade or invest in, you obviously want to buy that asset at the best possible price that you can. And why I use this strategy is because it helps in many instances to enter the market when you least expect it. So looking at this candle, one can see that this was a very quick movement, and I actually remember when this happened a few weeks ago. And guys, I've got to tell you that you're probably not going to have enough time to enter the market. If you don't have any preset orders on an exchange where you're buying, so whether it's Binance, KuCoin, there's hundreds of exchanges out there. Whatever exchange you're using to trade on or to buy your coins, you are not going to have time to get in front of your computer or on your phone. You might be busy with something. You could be at work. You could be busy with something. And most of the time, 9 out of 10 times, you're not going to have enough time to jump in and buy your coins at the price that you would hope to buy them. So just quickly, and I don't want to make this video very long, I'm going to just keep it short and brief. What I do is I stack pre-placed orders below the market price. So, for example, we're looking at Bitcoin. If I just open up, and I'm doing this on TradingView, folks, obviously you will do this on whatever platform that you are trading on, where you're buying your coins. So I'm using TradingView just to keep it all simple, and we're going to place a limit order, and we're going to say, okay, so we're going to jump in here now, and we are going to, sorry, this is not quite fitting onto my screen here, so let me just make this a little bit smaller, if I may. There we go. Okay, so if this is the price here, and we want to jump in here, we're going to go limit, and then I'm going to say here where it says price, I'm going to just look at the price of it's sitting at, let's see, hold on 1 second, folks, sorry for messing around, just want to move this out of the way, and if we have a look, the price is sitting at 48,718, and I say to myself, sure, you know, I don't want to pay that kind of money for Bitcoin, so I'm going to now enter the market, I'm going to go put my own pricing, and I'm going to start stacking down at, let's say, from $45,000 downwards. I'm going to go $45,000, and I'm going to go place an order. I'm not even going to worry about take profit and stop loss, because if you are just spot trading, you're not leverage trading, you're not going to worry about all of that stuff. You're just going to be buying your Bitcoin or whatever it is at a certain price. So I'm going to say, right, buy at 45, I'm going to place an order. There's an order. Okay, now I'm going to go and place another order. And I'm going to go and put in my limit again, and I'm going to go and put it in at, let's say, 44,800. 44,800, and I'm going to go place another order. Okay, you can see there now I've got 2 orders so far. I'll just stretch this out a little bit, and then I'm going to go place another order, and I'm going to say, let's put it in at 44,500. 44,500, sorry about that. 44,500. I'm going to go place another order, and then I'm going to go place another order, and I'm going to just carry on doing this until I've stacked all the way down. Now, you know, it doesn't really matter how much money you can obviously use what you can afford. Let's say you're going to be putting in orders of, let's say you've got $1,000 that you want to use to buy Bitcoin. So you're going to split that $1,000 up into 20 segments, and you're going to stack them all the way down to 40,000 or 41,000, whatever it is that you've decided you'd like to buy your Bitcoin for. And once again, in there, I'm now going to go put in, and I'm just going to space it out a bit more. I'll put in another one at 44,000, place another order, and then I'll do it again, and I'll go and put in one at 40 limit, and I'll go put another one in at, let's say, 43,500, and I'll place another order, and I'm going to do it one more time, and I'm going to go and put it in at $43,000, let's say, $43,000, and I place my order, and you folks can see. So the idea of what I'm showing you here now is that you can see, if I'm going to dollar cost average into the market, I'm now going to be placing pre-placed orders on whatever exchange it is that I'm using, and when these events happen and they occur, it doesn't matter if I'm sleeping, if I'm at work, where I could be busy with something, I'm going to be able to buy my Bitcoin at a much lower price than if I was, you know, waiting for look, I mean, you can. A lot of folks will say, listen, you know, I'm going to wait until the price comes down and then I'm going to enter the market. But you don't know that. You don't know if the price is going to come down. You don't know how far the price is going to come down. And, you know, this is a sure way of catching the market and entering the market at prices that you would like to buy your Bitcoin or whatever asset it is without missing this opportunity. Okay? So this is basically, folks, a short, quick little demonstration of how you can dollar cost average your way into the market. And as I said, this little video is for entry-level beginner traders, not for the advanced folks. You guys know exactly what I'm talking about when we talk about dollar cost averaging, but for the entry-level traders, folks that want to learn how to trade, this is a technique that you can use to enter the market at lower prices, and regardless of whether you're working or whatever, you will be able to catch these spikes down in the market without missing these opportunities. Okay, so I'll finish off by just saying that, this is not the only strategy that we can use to dollar cost average into the market. There are other ways, but this is a technique that I use, guys, and it seems to have worked very well for myself. As I said, I do this quite often when I bring new money in and I've got new money to spend. I don't just come into the market and buy $1,000 or $2,000 all at the same time. I spread it out and I exercise a little bit of patience, and I enter the market 9 out of 10 times at a much better price, because markets, as we know, don't only go up, they come down too. And we want to be prepared and ready for when the markets come down, that we can enter and get better prices for whatever asset it is that we are buying. Alright folks, so that's pretty much it for this video. If you like this content that I'm making, if you find it useful and helpful, please subscribe to the channel, like and share. Hit that notification button just to alert you when there's any new content and videos that come out, and enjoy the rest of your day. See you all in the next one.